We need to jump right into the Nasdaq 100 and the SP 500. Yesterday was also requested that I go over the Dow, the US30, so we'll also be doing that here as well. There were some big influential moves specifically this morning going on the market, and some news we talked about yesterday you needed to watch. But tomorrow is the big day. We're going to talk about exactly where you are, why you were rejected, and why I believe this is the beginning of something that's going to be taking place over the next few days and weeks. Before we get into that, I ask you to consider doing two things: liking and subscribing. Every single day I post videos for you, so you are prepared. Also, if you're not following on Twitter, I recommend doing so every single day. Tons of charts across the board, so you can stay prepared and you know what I'm thinking throughout the day as well. Let's get to it. So when we get in here, I want to talk about a few areas where we're at now. Obviously, beginning of the day, we started at new local highs. You had my attention, very bullish in the beginning, and then boom, an immediate rejection. What happened? Now, out of the gate, if you did not know, I posted this on Twitter. It was a clear-cut daily supply zone. I've been showing this every single day here on the week, where you're at, why you're getting rejected here continually, and the candle doesn't look so good on the day. We're going to get into that here in a second as well. But I do want to go back to the 1 hour chart so you can see everything maybe a little bit more clearly. And so as you see us pushing down, getting back below as well yesterday's low, that's now becoming a resistance here on the chart. However, what happened? Why did this happen? Now, beginning of the day, I told everyone yesterday we had some news coming out, manufacturing PMI, and then we also had Europe announcing their Fed decision, their rate hikes, everything in between, and some big concerns they had as well. That was all on Twitter, posted all of that. Now, we saw manufacturing PMI come out pretty awful, pretty terrible. Job openings, this is the opposite of what we wanted to happen, okay? This is bad across the board, and in my opinion, this is setting up for a terrible Fed meeting, which we all know is happening tomorrow, right? So if we go towards tomorrow, so you can see real quick, we'll come in here, you can actually see where this is coming out, what's going to be happening on the day. 2 p.m. Central Time, that's when this will be released, or actually 1 p.m. Central, the FOMC statement and the interest rate decision. We want to see what they're going to be looking at for the market to happen and ultimately where we are headed. And that's what we need to talk about specifically in this video. Now, before we go too far in this as well, I do want to say I did cut my November 18th puts, okay? My shorter dated puts, I got rid of those today with the volatility. Why? Those were moving a little bit worrisome to me, okay? I didn't like the way they were seesawing back and forth, and they didn't get quite as high in the beginning of this move as they did back here. They ended up getting a little bit higher as you drop down. However, I just wasn't as comfortable with those. If you don't know, I'm in the January 20th puts still on my Qs, and those are still looking great. So that's my overall position right now. I will say as well, I did not like SPY as much, but let's talk about what happened here with SPY. So yesterday, we mentioned this, right? I'm going to talk about exactly what we talked about yesterday and then how this coincided with today. So yesterday, you were rejecting at your previous highs that you had on the October 26th level. I highlighted that you had every hour on the hour getting rejected from this level. You opened up with a gap up and a strong push, 390, big level, right? We even had it highlighted. Remember, we had all this highlighted for you. And guess what? You push down, you reject, very strong. Now, the thing why I love this so much is because this is one of your first signs of weakness here on SPY. I also addressed you have 33% of all the S&P 500 companies reporting earnings this week alone. It's going to show a lot of weakness or strength for the S&P 500, right? And this is one of the weakest times you've hit based on some previous moves, arguably going back to the 18th and even the 14th is comparable weakness, right? But since then, it's been nothing but upside, nothing but continuation and mounting previous highs, and you're finally getting below those now. Now today, again, where are you at? What's happening here? It's really clear to see. You can see your previous lows that you had basically established here. I'm just going to just put a rough line, rough estimate here, but just going over where you saw the lows from yesterday. You're flipping. Break down, flip above. Now you can see rejection, rejection, rejection across the board. Very similar to what's happening here on ES, like I mentioned. And going into the end of the day, more weakness. You could argue this is a bear flag as well. So you can see that. Clearly bear flagging here. Just want to highlight that so you can see that. Take note, do whatever you got to do. But I will say, none of this matters if the Fed comes out looking for upside, going with the pivot theory. Now, I am anti-pivot theory. I anticipate more downside, more blood. That's why I have puts. But you have to leave that on the table so you know nothing is guaranteed in this. You never just YOLO into plays. You got to have a game plan as well. Now, it's worth mentioning tonight we do have earnings. I do want to say that, do cover that. I believe this has a little bit of influence on the market, not as big as some of the other ones. Tonight we have AMD, DVN, energy company, they'll probably do well, Airbnb, and that's MicroStrategy, nothing too big here in my opinion. Tomorrow morning, you have a few others, but after close tomorrow's, we have the bigger ones, so that's going to be to look forward to. However, I don't see these being as important as the Fed decision, in my opinion, will move the market overall compared to anything and everything else, right? So that's what we need to know. But tonight I'd be watching out for AMD earnings. So that's what I'm looking at on that overall spectrum when it comes to earnings. Now, as we progress through the day, I do want to go over a little bit what's happening here with flow. If we come into flow looking at SPY, I don't want to say it's too heavy on the put side. It is, primarily puts here, but I will address this is nothing as heavy as what we've seen before. I think more flow will come in tomorrow before the decision. That's when most of those, minds and decisions will be made, if not already. Qs, again, we've seen the going theme here. People are very, very short when it comes to Qs. They don't see the potential upside here, and I think that's been clear when we look at the book here, specifically on Qs. And I recommend going and looking at the chain for options and in the money positions for the January 20th level for 2023. It's a very bearish day, in my opinion, if you go and look at that chain, and you're always seeing the market getting hit a little bit more. So going in here, things that I'm liking. I'm actually going to give you some stocks that I'm liking for the potential downside across the market, okay? And I haven't done this in a while. We're going to get into that here in a second, so wait till about the 10-minute mark. That's when we'll start going over that. Before we go, let's talk about what's happening here with the dollar. If you're not following the dollar, I recommend doing so. These are all the same levels. I do not delete them, so if you want, you can copy and paste them, put them on your charts if you will. I also post them on Twitter, so everyone has that information also. There's no secret sauce. I leave it out there for everyone. If you're not in Discord, you need to be on Twitter, in my opinion. If you look here, we came down this morning. When we had that bullish move on ES and NQ, we mounted this level and then we popped right back up. These are the same levels. I haven't adjusted it. And you came back to our resistance and you're getting rejected now. I do anticipate we'll get above this level as well, depending on how the Fed comes at this. This is going to be a pretty influential move. I think the Fed, the ball's definitely in their court. I will also say, when we go and look at what's happening with yields, we talked about how they lost the 4% level and you're maintaining it again. We've seen us drop here on yields. I will cover this on the 1 hour. You can see we've dropped. We get above in the 4%. We'll lose it. But I will say the thing that I love here right now is look at how you're moving. You're creating higher lows here. Okay. I do want to highlight that. The yields continue to strengthen. You're getting closer and closer to that inversion, which we continue to talk about here. The 30 versus the 10. Okay. As you look here, you're bouncing once again. Like I said, higher lows across the board for almost 2 years. This continues to look bearish for the economy, and I don't think a pivot is on the way. However, again, I'm not going to throw it out the window. I'm not going to say a pivot is not coming. However, I'm putting my money on the opposite side. I have stops. I have everything in place. I'm willing to take the loss if it happens, but that's where I'm at right now, and that's where I'm looking for this going forward. Also, want to mention oil. People have been talking a lot about oil. You're sitting at this main level. This is your 2021 high range, so I would keep this in the back of your mind. I'm just not too interested in this at the moment. Now, I promised you, and I told you I'd be looking at positions and plays going into tomorrow and ultimately into next week and the weeks ahead. What do I like? Where am I digging my heels in? Okay, first, obviously indexes, that's where I love. Beyond indexes, what do I like? First up, IWM. This is also an index, but I want to highlight it's one of the most disgusting charts I've seen. Clear ascending wedge here. I also want to mention, where are you coming towards? If you go towards the daily level here, you can see your 200 MA is right here. This is in tangent with being a massive rejection, in my opinion. I'd be targeting the 178 to 179 level. Immediately beyond that, if you like longer terms holds here, I'd be looking for a lot more downside and new lows to be established if the Fed meeting goes as hawkish as I believe it will. That's where I think this will be going. That's my targets, and that's kind of where my head is here specifically. Beyond this overall look, I'm looking more into banks. I love where the banks are. If you go to the daily chart, I want to talk about Bank of America and a few others. Bank of America, right up to supply. 200 MA as well on the daily. It's beautiful. I love where it's at. You have a little bit of upside, but I believe your stops, you're setting yourself up in a great position. If you look at something like January 20th going into 2023, the puts for $35, nearly in the money, are around 160. And you can have tight stops if you make a new high here, and that's where I'd be cutting out, and I think your risk is about 25%. If you do get rejected, obviously I'm looking for some really big downside down to 33, 34, most likely even testing new lows potentially. Okay, these banks, they've been moving really good. They're pretty volatile and the contracts are cheap. And I know some of you wanted to see some of those cheaper options also. Now, I do want to cover Dow, and I'm going to go somewhere with this as well because I know people have questions specifically about this. I do believe Dow is the most bullish sector that there is right now. I think industrials have killed it, and they deserve it. They deserve to be where they're at right now. They deserve to be leading the market as we speak. Now, I believe this is a supply level you're at. You could argue the supply level is around, I just don't think you're going to get to this high. If we go to the 4 hour, you can get a little bit more clarity here on the supply level. So that's where I'm marking it. I don't believe it's this next one. You could argue this is a resistance too, and I believe it is, but I just don't think we're going to get there. In my opinion, looking at Dow, I think there's downside. I think the downside is pretty gnarly. And if we look at the comparison of how this has moved, it's already tested pre-COVID highs. We have to address that here. You have already tested pre-COVID highs and you've broken below. And I do believe you could see more slippage here. Now I will address their earnings did fantastic. However, I still think the Fed does not pivot. The Fed comes out bearish. You have to anticipate the blood. You have to anticipate downside. Specifically, CAT. Look at where it's at. I think CAT is a tremendous stock. Long-term, beautiful, awesome stock. But you have to realize where you're at. You do have a gap up here, roughly 223. That would be almost an immediate short opportunity for myself. However, I still think there is potential for downside. So what I'd be looking for is a loss of around the 215 level. If you start to lose this, I anticipate a quick surge back down to 210 and then trying to fill the gap back down to 200. The 200 is going to be a massive level, so we're going to have to come back towards this, but I would keep it on your chart to see coming back to this level, also coming back to this pivot point as well. This is going to be very important. These are going to be a few levels to be watching. Or again, going to see if you can lose 215, 216, or start showing weakness specifically on the Dow. The Dow, again, one of the strongest overall, and you have to respect the move it has done so far. Now, going into some of the others, I don't want to be too bearish on Apple or, some of the ones I've already made new 52-week lows. Amazon. I think you're pulling strings here. You're getting a little bit too aggressive, if you will. And, people may disagree with me. Amazon, huge support. I could see potential for some more downside, but it's just how low do these things really go? And I'm not going to be someone shorting the lows here. So that's what I'm not focused on those right now. I'm very interested to see how Square and PayPal do. Those are going to be some big names I think you need to watch also. Square specifically because I believe small businesses are in trouble, and this is where Square thrives. PayPal and Square have earnings this week, so I would, of course, be waiting for those earnings to pass. But I do believe this is a massive level also, specifically on the daily. If we go to something like the 4 hour, you can get a little bit more clarity of where exactly your support is. But, all in all, you don't have that much room before you get back below 52-week lows. And I definitely think this is one of those plays that has a lot of potential downside. You're absolutely getting killed here. And I do think you have to look for those COVID lows down here. $33. I know it's crazy, hyper aggressive. This is where I would start probably buying for the long term. I love Square as a long-term company, but ultimately this is what you got to be targeting. 33, roughly 32.5 and 42. So this is where I'd be looking first stop 42. Very similar to how we looked at Meta and those other plays. If the earnings come out bad, this is where I see you going ultimately over the next few weeks. Also, so that's my opinion. That's where I see us going. I like the first ones I mentioned the most, but I definitely want to give you guys some options, and I'll be looking over and covering these throughout the few weeks as well. I'll see you tomorrow. Make sure you comment if you have any questions or something you want me to cover tomorrow. Have a good one.